Hello there, this is James and you're watching Tixee Live, and a very good afternoon to all of you, and all of you a very happy Tuesday. In today's little program, I want to talk about, we'll ask the question, and that is, if you're bullish about the market at the moment, are you fighting the Fed? That question. Plus, I want to discuss some pretty scary opinions by Goldman Sachs about the UK economy. But before I get into all of that, don't forget these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So yeah, I really want to ask this question because I did a video about this a little while back, and that video was called Don't Fight the Fed. And I want to ask the question now, I mean, if you are bullish about the market at the moment, are you fighting the Fed? And the reason why I asked that is because one of the key Fed members, he actually, last night, he actually said he was happy. He was happy to see the market crash after Friday. He was actually happy to see the market collapse like it did. This Fed member is the Fed President Neil Kashkari, and he said, I was actually happy to how Chair Powell's Jackson Hole speech was received on Friday. I am actually happy to how Chair Powell's Jackson Hole speech was received. He carried on to say, the reason why he was happy was because now people can now understand how serious their commitment to getting inflation back down to 2%. Okay. In the past, I asked this question a little while back. Okay. Are we kidding ourselves? Are the bulls kidding themselves that the Fed will be light with us with interest rates and maybe look at cutting interest rates? I asked this question, and he went on to say something else. I certainly was not excited to see the stock market rally after our last Federal Open Market Committee meeting. Now, those of you remember, a couple of weeks ago, we did the FOMC minutes, and I did it from home because it was a late night event. And we discussed it, and I dissected. There were some parts which was dovish, but overall, it still had elements of being very hawkish as well. And the market next day reacted in a way that, it took it as a very dovish minutes when it wasn't. And I did a video on this again. And I said, are we kidding ourselves? Is the market kidding itself that the Fed's going to be general? And like I say, basically what Mr. Neil Kashkari is actually saying is he's saying that point. He wasn't happy with the rally a few weeks ago because he thought the market was not taking them seriously. The market is now taking them seriously. And this is why we see the market under pressure. And in fact, in the latest developments, UBS has actually increased the probability now of a recession in the United States within a year to 60% from 40%. Okay, so this is the development. Like I say, I think the markets, I've said this previously, I think the markets are kidding itself. I think you are fighting the Fed if you are slightly bullish as well in the medium to long term. So I think you are fighting the Fed. And I think, obviously, like Neil Kashkari, he's actually happy now that maybe, just maybe, the market might start taking them seriously. Might start taking them seriously. In another matter, something else which came out today, which I find quite really scary. And it's a warning from Goldman Sachs. Okay, Goldman Sachs. And they said if the energy crisis cannot get handled in the UK, inflation could go to 22.4%. I'll say that number again, 22.4%. Okay, inflation currently in the UK stands at 10.1%. Okay, the Bank of England said in October inflation could go to 13.4%. Okay, and Citibank has said 18% at some point next year for the UK. Now, Goldman Sachs is coming out and saying it could go to 22.4%, which is just simply frightening. Okay, and as well as that, they said that could wipe out as much as 3.4% off the UK GDP. And there's something else I want to discuss because the market hasn't talked about this yet. The market hasn't talked about it. We mentioned it briefly in the past, but it's not going to be in a focus. But I want to have a quick look at this because I think this is a big deal, which is happening next week. And this is also being picked up by a very large investment bank in the US, BBH. Okay. Now, and I'll tell you what that stands for in a minute. But they reckon the British pound US dollar could test the March lows of 2020 of 1.1410. It's currently trading at 1.16650. We'll look at the markets again in a minute. Now, this investment bank, by the way, this is the Brown Brothers Harriman. It's a very big investment bank in the US. And they in their report, they've said this, and this is a point I want to bring up because I think this is going to become a big deal next week, especially for cable traders, which is British pound US dollar. They've said this: we've been pointing out for a while that the notion of a trust-led UK government is concerning. Don't forget, she's one of the leadership contenders to be the next Prime Minister of the UK. And they say it's concerning. And because she's planning the following, which I have to agree with them on this. Number one, large-scale tax cuts to help with the cost of living crisis. Ain't going to help. BOE, Bank of England mandate and review, as in review what the Bank of England doing. Bank of England are supposed to be an independent party. So that is also worrying. And hard Brexit. She wants to carry on with the hard Brexit. Okay. Now they say this: none of these can be seen as positive for the sterling, positive for UK gilts, as long as and so long with a likely recession in Q4. The reason underweight UK assets are piling up. So this is not good. I do have to agree with them because I have been a sterling bear for a little while as well. But I think this trust thing is becoming a big deal. And don't forget, UK leadership, this is why we haven't talked about it a lot. We've mentioned it, but I think this is going to become a big deal in the future, certainly next week. The UK leadership result will happen on the 5th of September. And like I say, the market is scared and it's going to build momentum because we've been too busy focusing on the Fed and other stuff at the moment. We haven't focused on this. But next week, when this happens, the market's going to really get scared if trust wins because some of the things she's planning to do don't stand up. And a lot of economists and a lot of economic experts are saying this is not going to work. So anyway, that's going to be a big thing on the 5th of September. Is that coming in? I think it's going to get a bigger, a lot more spotlight as it gets closer and closer to the 5th of September. So remember the 5th of September. Anyway, other news before we have a quick look at the markets as well. German consumer price index came in today, as expected, at 8.8%, as expected, but that's still a new high. Now, the focus, like I said this morning, is really now going to turn to the EU CPI, which is happening tomorrow. And as I said, there's 5 big banks are predicting it to come between 9 to 10% tomorrow. So again, that's going to be a potential major mover for the euro, because obviously this will then put pressure on the bank of the ECB, who are expected to raise rates on the 8th of September. But are they going to do 50 or 75? If we get 9 to 10%, they're going to have to be quite aggressive, aren't they? So that's going to be a potential mover for the euro. As the market stands, basically we have a continuation at the moment. The market did have a post-parallel route breather. But at the moment, as the US session is open, we're seeing dollar strength again. And I'm going to bring it up. And we're going to see indices now again under pressure. So let's pull this up. Let's have a quick look at what's happening. Start with the euro. Again, okay, trading just just above parity at the moment, currently trading at 1.0011, testing that level again, that key level which we've been talking about, 1.00027. So dollar strength. Sterling, similar picture again as well. Now under pressure again, currently trading at 1.16651. Could it go to 1.14 like BBH actually thinks it could do? Like I say, I think the trust story is going to have more momentum for the sterling at the moment. It's difficult to be a sterling bull at the moment. It really is. Dollar yen. Let's have a look, see if we had a big movement on that. Not massive, not dramatic, but a little bit of dollar strength for that again. 138.54. Let's have a look at the S&P 500. Again, look at this. Under pressure again. Under pressure again. Now testing the lows it was doing on Friday. Currently trading at 4,007 points. 4,007 points. So if we have a look at the daily, have a look on the daily. Okay, this is a key area, as we can see. That's around about the 50 simple moving average. But, is it going to be able to start falling down to those June lows, the lows experienced in June? So a lot of pressure. So yes, indeed. Well, somebody's obviously going to be happy. And Neil Kashkari is going to be happy at looking at the market at the moment. So yeah, that's under pressure. Let's have a quick look at gold. Gold is under strain again as well. Currently trading at 1,029, just above that ideal level of $1,727. So that's what's happening. We've had a bit of a breather, a little part of today, but now once again, we can see again, the market is open with the US session open. We've sort of maybe the reality is beginning to set in a bit. We're going to have to look and see how the rest of the US session unfolds. But that's where we are at the moment. Major events happening this week. Again, don't forget, I haven't taken out the German CPI. That's already happened. EU CPI tomorrow, which is key. German retail sales, US ISA manufacturing PMI, and US non-farm payroll and unemployment. I will be doing a watch along for the NFP and for the US unemployment because, like I say, I really think the big one this week, the EU CPI is going to be pretty big tomorrow. I do think that's going to be quite important. But I think the big one this week is going to be the NFP. I really, really do. So please come along and join me. It's 12:20 p.m. UTC. I usually go on 10 minutes beforehand, before the event. We watch the event together. And don't forget, we often discuss several scenarios of what we think could potentially happen on the back of that event. So please come and join me for that. European equities, as they currently stand, better than USA equities at the moment. FTSE's currently up 0.66%. DAX currently trading slightly higher, 132, and Eurostoxx 50 currently trading at 0.31%. Let's have a quick look, see if anything. Yeah, no, say like the S&P is still under a lot of pressure. So we have to look at that. Don't forget, you can ask me questions anytime you wish, or simply share your opinion if you wish. Let me know what you think. Share with me your opinions on the matter, your ideas, or just simply say hello if you like. Simply say hello. I mean, what do you think about that BBH report? I mean, I find that I can see what they're saying because I can see there's a lot of market concern about trust winning the UK president leadership. Hey, hello to you too. How are you? Hope you're well. So there is a lot of concern about that. And like I said, though we talked about it a little bit in the past, we haven't talked about it a lot. So I think maybe that's going to start settling in as well. And 22.4%, that is frightening by Goldman Sachs, saying that UK doesn't get on top. That could be the inflation. That is simply terrifying. So that's also very worrying. But let me know what you think. Don't forget, of course, if you think of a question later, you can put it in the comment section on either Facebook or YouTube, and I will see them, and I will reply to them next time I'm live on air. So bear in mind, you have that option too. Don't forget. Oh, and tomorrow, not happening tomorrow, but I will end up announcing the time. There's another thing I just suddenly remembered. Another thing, I will be doing another episode of my new series. This will be on Thursday, #AskJames. That will be on Thursday at, again, 12:30 p.m. UTC. This week's topic was sent in by a Jay Davis, and they've asked me to do a special video on explaining candlesticks. So I will be doing a specialized video on candlesticks, how to read them, how to understand them. I also discuss a little bit about candlestick patterns as well, how to recognize potential patterns, etc. with them, and also the sort of common mistakes people do when reading candlesticks. So it'll be a really interesting episode. It'll be a good one. So please come and join me for that. And an email will be going out shortly about that, obviously, to all our tixee family members and friends to let them know about that. So do bear that in mind too. Okie doke. If there is no questions, not a problem. Not a problem. Like I say, if you're watching me on Facebook and you've enjoyed this little video, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little video, subscribe if you like. Hit the notification button so you know next time we're going live. If you enjoyed this video and found it interesting and useful, oh, hang on, there's one more question. I think Truss is saying these things to the public, what she thinks that people wants to hear, but going to damage the economy further. I couldn't agree more. I just goes to show, I mean, obviously tax breaks is a big leading thing. We think that the UK to handle the cost of living crisis is to reduce taxes. Who's going to pay that back? How are we going to generate the money for that? So no, that's not the answer. Putting attention on Bank of England with the mandate and a review, yes, that's obviously getting the public to think it's all the Bank of England's fault, this situation, which is not. It's not their fault. I mean, they're not completely blameless. They do carry some of the responsibility happening, but so does all the other central banks, ECB and the Fed, are just as responsible as well. But yeah, it's not all their fault. And obviously going on about the hard Brexit, yeah, that's just towing anyway, I'm not going to get political, but I agree with you. I think it's for public opinion, but don't forget, she's not getting elected by the public. She's getting elected by her other members of the Conservative Party. So she doesn't have to get their votes. It's the votes of the members of Conservative. She has to convince us who's voting for her. But yeah, I think that's a very valid point. I really do. But anyway, I'm not going to get political. So anyway, like I say, if you enjoyed this little video and you found it useful, by all means, give us one of these. It's nice to know that you like what I do. Anyway, big shout out to SMF790. Thank you for the question and interaction. It's always been a pleasure. I really appreciate that. And thank you to all of you for coming along. I hope they're smarter. I don't think they are. Again, I'm not getting political. They voted for Bojo. Anyway, as I was saying, like I say, again, big shout out to all of you. Thank you so much for watching me. I always really appreciate it. I really do. Anyway, till next time, don't forget, these little videos are for educational purposes only. And in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.